All right, so let's continue and let's jump over to another trade we were looking at. We were looking at this Russell 2000. This is the options on futures. This is the small cap stocks. This is just like doing the RUT, which is the RUT. This is the cash settled index of the Russell 2000, or the IWM, which is the Russell 2000 ETF, which trades like a stock, like a mutual fund that trades like a stock. And so, but it's so much more efficient to trade it in with the options on futures because of the span margin, and being so forgiving on how much buying power you need. And it's even better than portfolio margin and doing it that RUTs, that RUT. So I like to do it in this. We were looking at a no upside risk iron condor with 66 days to go. So a no upside risk iron condor is structured like this. Let's put it, that's frustrating. Let me see if I can get this to work without having to turn this off and reboot it. All right, so we were at the 2360, what we were selling the 2360, which is now the Russell has fallen some, so that's there. Come on. All right, get this to see if I can get this to work without turning it off. And that's the 2360, and this is the 2365. So you're selling, we normally sell the 30 delta, but the trade that we sent out this morning looked like this. And to have no upside risk, you're going to have to collect at least 250, because the max loss, if you add this back to your max loss, is 250. The RTY with the Russell options on futures is $50 a point. So this is 50 times 5, which is 250. So you would have to collect at least 250 to have no upside risk on this trade, and I'll show you that here in a second. Let's see if we can get to this next part of this trade without this thing going off on us. All right, so we were going to sell the 1940 and buy the 1880. So let's do that. Sell the 1940 and buy the 1880. So I'm going to set that up for us here. We're selling this one and we're buying this one. And we were looking for it at least 670. It's trading for 720 now. That is not bad. And so this is a pretty good trade with 66 days to go. You're getting your max loss on the upside is 250. You're getting 360 before fees and commissions. And if we go over here and kind of see if we can see this on this curve view here, let's bring this down, see if we can see this for you, everyone. All right, so this is the trade here. As you can see, a traditional iron condor would have, you would only be able to make money in between these two short strikes here, but you can tell that this wind zone, this green area is actually going above this call spread part of the iron condor. So you do not have any risk to the upside, because the most you can lose on the upside is 250. Once again, you are receiving about 365, 360. The way you lose if it goes down, going down is in this direction on this graph here. So it has to go down quite a bit before that's the case. And the Russell has been going down, but I think this is a very high probability trade. We put it as a yellow highlighted trade that we strongly recommend this one, especially for new people, obviously for experience as well. Does someone have a question? If not, please keep your mic on mute until you have a question, so we don't have any background noise. All right, so this is this one here. I'm going to put this in at 7:30. We're going to figure out which one we're going to do. I like this one, high probability trade. We might be looking at a couple other things. We got a number of things in here, so we're going to figure out which one gets filled first. We're going to send this one. Yes.
I'm sorry, what delta was it on the call side?
So right now it's a 25 delta. We normally set it up at a 30 delta, but I'm trying to do the exact trade that we sent out this morning via email. Okay. So that's the 2360. We're selling the 2360, buying the 2365. That's the call side, Jose. That's the call side here.
I messed with it a little bit. I got 7.
You got 7? Okay, that's not bad. 7. We were talking about earlier when we sent it out 670. So you got 7. That's perfect, right? So I might. It all depends on the other couple of trades I'm going to look at. Might put that in at the 7 as well. So just give me a second, a few other trades I want to look at this morning. All right, so did everyone get that one that wanted to do this? It's in your email as well. The strikes, we're doing the exact same strikes that we sent out this morning. All right, so let's continue at the Nasdaq, and we were going to 38 days. And on the call side, we are selling the 16,650. The Nasdaq is not down that much, which is good. It actually was green a few minutes before we got on this call. So the 16,550 is what we're looking at on the call side. What we sent out in the emails, 16,550, and then buying the 16,610. So, and that is a 60-point wide spread there. And then on the put side, we were looking at selling the 14,000, and that would be here, and buying the 13,940, that would be here. So 60 points as well. And we were looking at it for at least 7. You can see that this is going for 725. I actually like this trade right now. This skewed iron condor with 38 days to go. I'm gonna put this one in as well. We're gonna see which one gets filled. That's 131 over 259. So we're gonna send that, and then so we have these two working now. We have this Russell skewed iron condor. We have this NQ skewed iron condor. If you want to see that's NQ one once again, the strikes are the 14,000. The short leg, the long leg is the 13,940 on the put side, and then on the call side we have way up here at a 6 delta right now. We're selling the 16,550 and buying the 16,610. That's the iron condor there, the skewed iron condor. And then what we're going to look at is we're going to look at some stuff that I did not send out this morning. We're going to look at the ES here. I'm going to look at a call spread in the ES, but I want to go out. I want to do a call spread with 31 days to go. Let's see, this first might even do it with 61 days. So actually, you can see that we actually have some type of call spread working. I have some type of call spread working here now that hasn't got filled. So I don't want to go any higher. Let me see what delta that is. That's a 7. That's not too bad with 31 days to go. Let's see what happens if we delete that and move it up just a little bit. Let's see, cancel that. And that was a 7 delta. Let's see what an 8 delta looks like, 30 points wide. And that's a credit of 1 of 33. This is a credit to your buying power. So I like this at an 8 delta, 30 points wide, outside of the expected move. Let's see if we can get filled at the 210 there. We're not getting 100, but that's fine. We could make it 100, move this up a little bit. That's going to give us 100, a little bit more buying power at that 46.25. That's still a 30-point wide spread. If we can check this and see if the spreads are going to get a little different, we can do something like this to keep it 10 points, keep the numbers a little bit more even and not these 5s. And you can see there. So now we're at the 46.20, 31 days ago. We're going to sell this, getting 120 on that, and the buying power. If not, we will do it in the SPY. So let's look at here. All right, so we got filled on that. And then now let's look to see what happens if we do something on the ES on the put side with 66 days to go. And let me know if I'm going too fast. I'm going to go to this 3,700. I'm going to sell something that is, let's look at, let's try 60 point wide there at that 8 delta. So you can see we're getting 125 over 334 in buying power.
I'm a little confused here. On the last ES one, where you collected $120 for it on the 31 days to expiration, are you saying, are we now done with that one and you're not doing a hedge, or is this a hedge or what?
So we're not doing a hedge on that call one. I wasn't trying to do a hedge. I was trying to sell the call spread, get some short delta, but also finance a call spread that we buy to try to make money if the market shoots up tomorrow or Friday or something like that. But it costs too much, so I decided not to do that. So I scratched that and just kept the call spread.
Okay, that was a regular call spread, a credit spread on that last ES one. Okay.
Exactly.
Okay.
You want me to
Sorry.
go back to that, or you're okay with it?
I got it. I got the numbers. I was writing it down as
Okay.
you were going along with it.
Okay, perfect. So then we have this. I know it's weird, but we're doing it. We're kind of offsetting these things expiration wise, right? So the call spread we did with 31 days ago, that worked well because it kind of offsets some of the positions that we have in here. You can see if I break this down, we have a bunch of 31 days stuff here, and then we got some 45. So now we decided, okay, we're going to go a little longer than what we usually do. Primarily trade between the 30 and 60 day, but you do know we do a lot of stuff that's long dated as well. So we're gonna do this with 66 days ago at an 8 delta 3700 and buying the 3640, and we can get this for a decent price and buying power at the 125. So we're gonna let that send 118 over. Let me see, 118 over 328. That is about 36% return on credit on capital if we can do it. We just got filled, and then now we're going to go into here and we're going to buy a put spread to hedge this, right? So we're going at or near the 30 delta. We're going to buy that. I'm going to start this. This is the micro futures options. This is the ES, same thing, just a smaller index. It's going in the same direction. It's the same S&P 500, just a smaller index. So instead of 50 points wide, this is or 50 points or $50 per point, excuse me. The ES is the /ES is $50 a point, and this micro ES, the /MES is, I'm gonna get hard to write with this. It's $5 a point. So it's a smaller index, but it's a way to hedge without using a lot of capital. So we're going to go 30 points wide here. We're going to use up to $30. We received about 118. So this is $28. It's going to hedge us about $123. So we're going to do that. It's actually going to increase our buying power a little bit. So we're going to send that, and they're not going to fill us right away because it looks like the markets are on their low, at least the ES and the RTY. So we're going to bring this back up, take it to the 525. This should fill us now. Don't want to spend $32. That kind of jumped quite a bit. I don't want to spend $32 on that. So we were at 50. So let's delete this for a second, and let's go back. And what I'm doing is just doing a similar order, everyone. I'm going to move this down a little bit so that I can get it for the price that I want. So if I put this at 550, that's $31 already. I was already spending more than 31. 118, 30% of 118 is 30% of 118 is 35. So but I don't want to spend 30. I don't want to spend more than $30. So let's try this. That's 30 there. Let's see if we can get filled. No, not going to get filled at the mid. I guess we're going to have to give up a little bit and pay 34. That's fine. 31. That's fine. So we'll do that. It should get filled right away. All right. So there we go.